Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in, futures were down a little bit, but it just felt as if there was a seller in the pits all day long. You know, at first stocks tried to hold up, but then after, I think there was a 10 o'clock number that came out that was just very weak. And then it was persistent selling all day, and then we broke below yesterday's low. And, you had a nice move to the lows. And then, lo and behold, 3:30, woo-hoo-hoo, Wall Street Journal puts out some kind of story that the Fed will act or is looking to act, or one of those type of words in August 1st versus what lately people have been talking about more of a September, acting type of measures for QE. And, they squeezed every short out of, or uncommitted shorts out of some of their positions, because the last, 7 minutes of the day we rallied and we took back that 133.84, and then now we're about $1 lower in the futures. So, if you're a VTF member, you see that I am still short the spiders via puts, but the overall spider position, I got stopped out of the last little portion of it because, once you go through a low and back above it after a 3-day down move, typically that could relieve some pressure. So no reason to stick around, so I took the trade. But overall, it felt as if today was different, or the well will be dry for those looking to buy, at that intermediate uptrend. And a lot of guys made some good money today. So just quickly before I start getting into the earnings that are out after the close, if you look here at the chart of the SPX, you will see, this has been the channel that we've been following. Last time we hit the low end of the channel, we came up real quick, like kind of exploded. Almost every time we hit the low end of the channel, we exploded off it. So, that kind of gave me some clues that I thought maybe this time is different, especially also considering that each time, we've rallied up, we hit the high end of the channel, and the high end of the channel would have been almost a 1400 S&P print. Instead, it just pushed through this 1374 to get some shorts out of their position, and wound up closing that day right around it before that potent day on Friday. So here's Friday, here's Monday, here's Tuesday. You take a closer look now at this, and you will see that, we pretty much closed below it, and that definitely is a sign that the first time we could have more of a trend change / correction type activity. I think most momentum guys on this day get out of most of their longs. If not, they were stopped out as we traded below this area, yesterday. Today was a decent day to make money short, but if you tried shorting the lows at the end of the day, you got a bit squeezed. So all in all, the low of the day is 1329. You have here 1325. Here is your new points of reference to trade against. If you take a look at the IWM, was something we were talking about in the morning call this morning. I know it doesn't necessarily lead the markets, but anytime you see the growth area of the market really start to get hit first. You saw a trade below this trend line yesterday. It took out yesterday's low well before the market, giving you some clues that you could short the spiders below yesterday's low, which wasn't a great trade, but it was 133.84. We did go down to 130. No, we went down lower than that. We went as low as 133.07. But anyway, some money to be made. But it was a very stock specific trade. Baidu gapped up and did a nice gap and go. Guys caught that move off the open, and then it just trickled down and didn't find a friend. BMW opened lower and then went positive for a trade when no one was expecting it. The market's trying to do things that no one really is expecting. So you really have to either stay with your thesis over a longer term time period if you think that's what's going to play out, or take your trades on a micro level. Then you had AT&T open up and just trade lower for the rest of the day, which is never good. You look at AT&T here, it opened up once it traded back below 35.50. Some guys were getting out and getting short, and now you have a very potent day that it just engulfed this entire upper range. I know it came a little bit off the lows, but to me, that's a bit of a warning sign. You look at BMW, it's come in so much that I guess it could be priced in, and that's why I went from negative to positive, but there's nothing great there either. I don't see any compelling patterns that I'm just like, flapping at the gums to buy, if that's a term in financial land. Do you ever see gums flap like this? Anyway, you probably see it more on TV, and I guess I'm talking, so my gums could flap. Anyway, it's just funny because Panera came out, guys were looking for the results. They actually beat on everything, and everyone was thinking it has to miss just because, CMG's been so weak, and lo and behold, it wound up going up $4 to $6 after hours. And then really the big earnings report was Apple. Apple came in. I talked today in the morning call about a few different things. So if you come back to me, I basically said, common sense wise, I just felt like, you base a little common sense on this quarter. I have the iPhone. I've been sitting on it. I want to get rid of it, but I'm waiting for the new one. A lot of people I know have the same one. A lot of people I know already have the iPad. It just was one of those common sense scenarios where maybe it's just gapped up the last so many times that this time it won't. So it was the first time that I didn't take, calls into or some type of long strategy into Apple. Just sometimes the gut's right, and it hasn't been right that much in the last 4 weeks. So I'm not like tooting my horn. It just was one of those plays that wound up working out. So tried to talk about levels. One of them 580, the other one like around 560, and right after the number came out, it was sub $10 in earnings, and light on the revenue. So if you acted quick, and those listening to the radio, they were heard me and Sperling saying, I'm shorting here. You were able to short 580, short 573, only if you were prepared, only if you knew what to look for with your levels and the numbers, and then cover below 570 and it hit a pivot low of 565. Covered below there, didn't buy back. In my head, I was kind of thinking that, with the earnings that came out, I know I want to be a buyer of this stock, but the numbers just looked so soft that I thought we would hit 558 to 562 before I really had a big interest. After hours, the pivot right now is 565. The other pivot's 574.5 and then 580. It's probably changing as we speak right now. If you go to the chart in the daily, this is what I kind of outlined this morning. Trying to show first, this 580 was right around the moving average, and I kind of felt that those earnings would not, 580 would not be a dip to buy. And then it did get down to this level here. This is 565. I drew this morning. I did not tweet that, I guess. I put 560 to 558, which is right around here, which was more, sustainable support, and then you have down here, which was major. So at this point, it's trading after hours. Tomorrow we'll go over a strategy based on where it is. But first time in a while, it's going to gap down, and I do think at some point it will be buyable. If it was a little bit more in line, I would say it should be after hours. But just because of the type of numbers that were out and their guidance, I think that a lot of people are rushing to just reflex and buy it after hours, but we probably can get a better entry tomorrow or the coming days. So let it sift out. If you caught the short, congratulations. If it actually met it's so funny how these options guys know everything, or they know a lot, where, they were pricing in about a $40 move or a $37 move. For those who buy the straddle, who think that, they can make money without guessing the direction, which happens sometimes. And lo and behold, 565 from where it closed was that price point, and that's where it first paused, right into that zone. So there's no free cheese for those guys that, that are trying to pick a direction or trying to play a straddle without a direction. So that, anyway, we'll see what happens. It's only about 4:50 something right now. The conference call is going to start, and we'll see how it goes. But for now, if you didn't take it, if you're a macro investor in Apple, I think you are fine. You are fine. You probably owned it for a long time, and the highs of the year, in my humble opinion, are not in. As an intermediate trader, I just felt there was no reason to be long it into the numbers, that we would get a better entry and you could make some cash flow short, which you did have some opportunity to do after hours if you were quick and prepared with levels. Netflix on the other side, someone should dig into what's going on there, because when they came out with the billion downloads or whatever that article was and caused a big short squeeze, it could have been right around the time the quarter ended and everyone knew what the numbers were, because those numbers were pretty horrendous. And Netflix after hours, right now is trading, I believe, right back where you had this nice cash flow long from. I talk about broken stocks as trades, not investments. That's why I said if you're going to trade this into the number, if it's wrong, you're not going to get a pass. You're not going to get a way out, whereas Apple's down 30 points. At some point, those guys are going to get a pass. For guys looking to play this long, go with options, so your risk is premium paid. Never even thought about getting above this area. It quickly went above, below 80, and now it's right back to 70. It's trying to hover here. I think it's maybe even a little bit lower to 68 at this point. It's just really, the stock's just broken, and And some guys might try and lean on it down here. For me, I think if you caught some money short, this level should try and contain the downside. That's where it came out from, around 68 to 70.50. Just another round trip for Netflix. And again, broken stocks are trades, not investments. With that said, Juniper was up a little bit, Broadcom down a little bit. At this point, we'll see how it goes. I don't know if the market just implodes, but you don't have to know if that's the case. If you go back to the SPX, all you have to know is that at this particular point, you probably should have a lot less stocks in your portfolio right now. We just came down, 1, 2, 3 days. We're below this trend line. So at this point, we might go a little sideways, but the longer we hover below this area, the more or the higher the probability, we come down and we hit at least this 1310 area. Some people are going to start saying, oh, we're going to retest the lows down here at 1255, which might happen, but you don't have to say that right now. All you have to know is that you had a push-through failure right here. Rally's been under pressure, according to IBD, for the past week or so, so that means be light on your feet, take trades, not heavily invested. And today they probably go to market in correction. Okay, usually when they go to market in correction, we just got oversold, so you get some kind of little bounce, but right now we're actually down $1 or so in the spiders after hours. But with that, but once, last time they put us in a correction was right here. Remember this pattern? You had your head and shoulders top. I talked about it many times. Left shoulder, head, right shoulder, neckline. On this day is when they went into marketing correction, and we did go down about 80 handles. I know within here they did it once as well, okay? But then, they also put the caveat that it's summer trading and it's very, very choppy. So I'd rather be a little chopped up than in harm's way, that if, we do start to, really start to accelerate to the downside here and they don't do anything August 1st and we have a long August, no reason to be so stressed out in the way. If you recall these patterns over here, when the market broke last year, it broke, this was 727. Okay, I'm not sure what today's date is, but we're pretty damn close to that. And look what happened when we broke. You didn't know that, or didn't have to know that that was going to happen. But if you were in cash light, you were out of the way of a crazy move down into the beginning of August, and then you were able to trade the August-September range, which might happen again. So, I remember last summer you had a more defined pattern. Remember that head and shoulders top pattern that we called out, that in the Drudge report, scary chart pattern. Scott Redler, T3 Live points out market could be under pressure. Well, it happened. Here it's a different type of pattern. As of now, you do have this ascending channel that typically when ascending channels break, it breaks to the downside. It just started, so we'll measure it along the way to the downside and see how low we go, what type of trading composure we have, but you don't have to know exactly right now. I'm not going to come out there and say we're going to 1255 or going to 1180, because you don't, again, have to know. What you do have to know is the levels along the way, so we can test situations, measure the leaders, see what the composure is, and trade in that fashion. If we get an outside day in the next week or two, we'll know that potentially the selling has subsided. If we get continuation moves to the downside, no leadership, breakdowns, this and that, then we'll know, stay out of the way, take your trades both long and short, trade from a net position, and wait till another time like we did see, in October, if you remember that outside day, back in the day, anyway, go to the chart. This was that outside day, back in the day, and that day was October 4th. Remember that? That was a nice entry. Okay, and then pow, and then remember the wedge coming into this quarter, and then boom, boom, boom. Anyway, at this point, we're so close to these highs. We just broke this trend. I think cash is king. Being short for cash flow, trading tactical plays versus lows, that will be the way to go. And that's the way I'm going to approach it. And I'm going to stay net short the market through spider puts just to keep the edge off. I will trade the spiders themselves, using a tier system back and forth based on the daily action, which you saw today. If you're on the VTF, you saw that I didn't come in short the spiders, shorted right around the open, made good money, shorted again around 133, or actually 134 and change. We made good money again, and then just got stopped out of the trailer. We'll be able to do that, but if you want to have a net short thesis for the month of August, you're probably better off doing more puts, so this way you don't get chopped around with what you saw in the last 15 minutes of the day. So with all that said, that there is some action. We'll see where Apple's opening. Tomorrow we'll see what level is buyable. At this particular point, everyone's going to come out and probably defend it. We'll see. I do think it is buyable, but I want to make sure we have a pivot to trade against, and we'll figure it out from there. With that said, hopefully you had a great day trading. It is only Tuesday. We have a long week to go. There will be some volatility, and just embrace the volatility because it could work for you instead of against you. Scott Redler, T3 Live, the recap. See you tomorrow morning at the call with Jill.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. Really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the #1 reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.